We are back with another episode, Macros with Bros. Uh, yeah, we're starting to push out a little bit of more content now. Working on getting some podcasts going, getting on some information, getting some information out there. And therefore, we're back. There's so much shit going on as always. We've got some exciting stuff coming on. We've had some interesting data, interesting earnings week. We're yeah, pretty much through earnings season. Most of the companies have reported. There's a few things that are coming this week. We've had some interesting stuff yesterday of Ford, of Palantir. This is all from the equity sides. And yeah, what's going on in your department and how are you doing? Of course, as always.
First thing, well, look, I can't even speak, bro. I'm so tired. First things first, doing good. But before we start, I want to announce something. The old channel and the Instagram accounts, they got stolen. And for the guy who took them, you can have them. We don't need them. So if anyone texts you, we will never do it. We will never text you first. We will never ever reach out asking someone for money unless you are one of our investors or it's quite legally and we work with you. Um, so this is important for you
But then
folks to
especially
protect
also
yourself.
not through Insta or something like that.
No, 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 no. No Instagram. We don't mess it. We will never ever do it. And please unsubscribe to the old stuff and follow this new channel here. With that said, I'm doing good, bro. It's a lot of stuff going on. Like I'm just checking on the Taiwan dollar.
Oh,
It
yeah.
should blow out like Friday. I didn't expect it to be something big, like I was okay if Friday it'd be an outlier, and then we saw it sticking yesterday into Monday and today. I
Yeah.
think the
Something
central
broke
bank did.
there.
I think the central bank did intervene, and I don't buy this argument of a look, the pension funds are taking this currency loss, and I don't know, something is going on there.
Yeah,
Problem
for
is there's
everybody
not
who
enough
who who
data.
didn't see, under the ticker USDTWD, you can see the currency
Yeah.
pair US dollar against the Taiwanese new dollar. And yeah, since Friday last week, there has been a crazy move in it. There has been some speculation on it, but it's quite difficult. Maybe you can talk more about it. It's quite difficult to find some information on it because nobody's talking about it. On Bloomberg, they are not talking about it. So something is going on in the background, and we're still trying to figure out what is going on and what the right steps, the right trades are to take on this one. Because yeah, something big is going on.
We got a problem. We were positioned in the yen. I'm just looking at the yen, and bro, we got absolutely cooked. The good thing is, I like yesterday when I saw it, I was able to cut half of the size, or we would have lost like a significant amount of
Significant
money.
amount, yeah.
Yeah, and we got out like small loss, which is okay, because this move in the Taiwan dollars, it's pulling back with it, like the yen, the North Korean, and all these Asian
South Korean.
currencies. Even
North
if you
Korea doesn't have a public market.
No, no, I said the Korean, yeah, the South
Yeah.
Korean. And also the New Zealand dollar is also going crazy because it's usually trades with the Asian currencies. So it was the right decision to take. Uh, as we laid out in our thesis last podcast, we are long the dollar currently. And oh man, it has been a roller coaster till now. Like it's stabilizing, yes, but every single day there's new data. We got the from last week the GDP data. And if you look at it, the investment component came in very good, beautiful, very beautiful. The only problem was the import. And as we talked about it multiple times on this podcast, it was due to demand front loading before tariffs. So now the GDP estimate from the Atlanta Fed is for the next quarter to be positive. And yeah, looking also, we got on Friday the NFP. Everyone's talking about deterioration in the labor market. The participation rate ticked up. A good number came in. ISM services PMIs came in yesterday, also beautiful, above expectation. Employment is up. And we see everything playing out as we want into a reinflation scenario. And the only failing metric for this to accelerate and for the main street to talk about it is oil. we need oil to start pushing up, and then you got it. Because
Yeah,
commodities
which
is up like I'm
we've been seeing since yesterday and also today, the move now before the market open. Futures are open, obviously. We've been seeing some push in this. So yeah.
yeah, so after the OPEC announcement came out, we were positioned at an extreme. This is one of my best setups. I love to trade this setup when you see extreme in sentiment and then extreme in positioning, and you get a macro driver like an increase in supply that there is no follow through because you gotta think about it like this. Okay, they increased this time by triple X. They're gonna push in the supply in the market. This will cause lower oil prices, and lower oil prices will cause at some point higher demand again for jet and travel. And if you look at it from a seasonality perspective, you are kicking into the summer, which is the traveling season in the US. So with with cheaper gas, everyone can basically afford to travel, which is going to increase demand and going to push prices higher. And the volatility was priced too expensive. I'm just looking at oil right now, trading at we we filled the gap, the complete the gap from this
Yeah.
drop. Yeah, beautiful. And it's a long trade. Like you are at an extreme. The risk profile is asymmetrical on this trade. You go balls deep, big size, and you make 2, 3, 4%. I think oil gonna stick like the 60, 62 maybe, if not even 64. And then
And then we got to see what happens if we push really to these highs of this consolidation here at the low range. And then this would be another extreme where you could look for a short again if we push up to this 65 back into this previous range we've been trading in like recently. But yeah, that will be an extreme scenario again then.
and this would be all would be we would put pressure on the CPI reading into next month because CPI tracks monthly performance. And if you see the oil ticking up month over month, a significant amount, let's say like 6, 7%, you're gonna get an ugly CPI print, and then the Fed is tight. Talking about the Fed, we get the meeting tomorrow, the FOMC meeting, and the market is not expecting a cut for tomorrow. But I'm just looking at the curve right now, at the SOFR curve. Market is pricing like 3 cuts this year, around 3 cuts. Um, I don't know. Seems reasonable, but if inflation starts sticking back again, it's gonna be tough. It's gonna be very tough. The most important thing to look into tomorrow is how is the Fed gonna talk and navigate all this political talk about Fed independence, and they can't cut, even if they want, but they can't cut tomorrow because it's gonna be very political,
Yeah, it's gonna
pushed
look
by
like a
Donald Trump.
political move, you know, like
Yeah,
it's gonna look
exactly.
like Powell caved into the pressure from Trump saying,
Yeah,
all right, we're gonna cut the only way, I think we talked about it in the last podcast, the only way they can cut is if they get the confirmation from the data. If they have confirmation from the data, then they can cut because then it's not going to show as a political move, as a move pressured by Trump, but instead it's going to be no, a move that they should do anyway, with Trump or without Trump. But yeah, so they're kind of in a difficult position here.
exactly. Like, why would you cut if the economy is still looking good? What, you know what I mean? Like the economy is functioning perfectly at 4.3% interest rate. Why would you cut if you don't have any deterioration in the labor market? Until now, they got no permission. The initial claims last week came in 240, still within the range, like at the higher end, but it's still looking okay. So why would you cut? And here's the thing, like the market is pricing about 50% probability for June cut. And the most important thing is in June, we get our SEP again, like Summer of Economic Projection, and we need to see what they are gonna project for GDP. Is it gonna stick with this front loading? I don't expect that because like how many quarters are gonna still like front load? Like we got the tariffs.
Yeah.
So the demand's gonna got to pull back, and the GDP numbers gotta stabilize at some point. So it's important to look at the wording from the political side, but also what are they gonna project for for June? They are not gonna ask him, why didn't you cut this time? They're gonna ask him, is there any probability to see a cut in June, or what are the chances for a cut next month into next meeting? And then he's gonna say the same old stuff. We are data dependent. The Fed is independent. We're gonna do what we are supposed to do for our dual mandate and all that kind of stuff. The beautiful thing that I am looking at, there is a shift in the credit cycle, which is going to be a topic for our next podcast because I'm putting in the research. There is a huge shift coming in the credit cycle, which is a have a big impact on liquidity. When we talk about liquidity, we don't talk about these liquidity sweep on the chart where these Instagram traders talk about. We talk about reserves in the banking system. We talk about the demand and supply for loans and credit. This is what liquidity means. And this is also a big component for risk behavior. If we see an increase in liquidity, this encourages risk taking in the economy as banks provide more and more loans for investments and more like these economic activities. So I'm putting research on it. We will talk about it next podcast. And we got the BOJ last week. Basically, they said we can't hike anymore unless because the tariffs will kick in on our growth unless we get 0 to 0 tariff. So this puts the yen at a short because now there's a central bank that can't hike, they are tight. Um, Plus, if we see a risk on environment or risk on regime continuing, like equities have been pushing lately, and Bitcoin has been, where's Bitcoin? 94, 95, yeah, 94 to 100. If we see these risk assets continue to push, this will encourage also risk-taking behavior where we can open a carry trade. Until we see this Taiwan dollar settling down, bro, it's gonna be quite tough. It's like I'm looking at it, the yen is like there is no economic data, there's nothing. The yen is dumping, like the USD GPY, it's dumping and dumping. I'm looking at this, I'm saying like there is something going on here, man. There's something going on here. And the EW, like if you can touch it on equity on your side, like the EWT, like I saw it, bro, like in from bottom to top, like 35%
Yeah,
from it's
the
insane.
thing is with the EWT, so we have seen this currency not devaluation, but strengthening in the Taiwanese dollar. And for
Appreciation.
Taiwan, yeah, appreciation exactly. For Taiwan, the economy is generally built up on exports. If you look at it, the a huge component of the Taiwanese economy is chip exports or technology or how do you say it? High technology, high tech manufacturing exports. Ne? As TSMC, Taiwan Semiconductor, they export pretty much all the high tech chips to the whole world, like the companies Nvidia, AMD, Apple. They need the production of TSMC, and TSMC mostly produces their high tech chips locally in Taiwan and then exports them out to the US or out to the rest of the world. And now what we are seeing, the Taiwanese dollar has been artificially kept lower, devalued, same as, for example, the Chinese government does with the Chinese yuan, in order to make their exports more competitive. And now with this huge move in the currency, in the TWD, in the Taiwanese dollar, this could hurt TSMC because their margins will get compressed. They have headwinds from the currency side, meaning that either they have to raise their prices, which will then lead to companies maybe trying to find other foundries where they can produce their chips. For example, Samsung in South Korea or, for example, Intel in the United States. Even though Intel has a problem, they're lagging behind in technology. But in general, will have two problems for TSMC. First, either they have to raise their prices in order to keep their margins, which will then, no, higher prices will lead to the customers looking for other alternatives, or they will have to compress their margins. They have margin compression from the currency headwinds. So now an interesting trade, which could be done, is a short EWT, because EWT is the index, the MSCI Taiwan ETF, um, which tracks the broad Taiwanese economy. And it's been pushing up with all these inflows into the Taiwanese dollar and general back risk on move in the chip area, no, especially TSMC, because I believe TSMC makes up about like 25% or so of the EWT, so a huge portion. But with these macro or with these FX headwinds, the general economy of Taiwan should be, yeah, should have problems. They should have margin compression or they have to raise their prices. So an interesting spread trade could be, if you span this idea a little bit further, an interesting trade could be short EWT, short the Taiwanese economy, which will have FX headwinds, and long the South Korea index, the EWY, I believe is the South Korea, yeah, exactly, EWY, the MSCI South Korea index or the ETF, because this way you can use the EWY as a tool in order to gain long exposure for Samsung. Because Samsung, yes, they do phones and all that stuff, but they also have a huge foundry business for chip production. They are the second biggest producer of the semiconductors, the chips, which all the companies know, Nvidia, Apple, and so on, need for their high-tech production products, or for the high-tech products. And therefore, you can take this kind of spread trade. You short the EWT, which should have headwinds, especially you short TSM in a regard. And then you hope for a distribution of the customers of TSM and a move towards South Korea, towards Samsung. Because investing in Samsung directly is kind of difficult because they are only in the US list or traded over the counter on OTC markets, which have a lot of problems with liquidity. And so it's kind of, with more size in general, it's difficult to take a trade on those. And also, the Samsung shares are also just traded on the South Korean exchange, which also has their own difficulties in order getting access, being able to trade there, and so on. So you can take just an easier way. You can take the EWY to get exposure to Samsung. And so this is a trade idea, which, if this move in the Taiwanese dollar sticks, could be something interesting here.
Would you short shares, like short the ETF, or use options? Because I was thinking about this. The vol, I'm checking it up. The vol is quite high, and you can sell some spreads, some
Yeah,
diagonal
this is
puts.
yeah, this is
What
the
I'm
way
thinking
way
about.
how you would, for example, construct your trade, you know. If you just take
Yeah.
the shares, you don't have all the benefits from using option strategies. And here at STO, we love our option strategies. So,
You love
um,
options, bro. You are
yes,
an option
yes.
lover. You
Yeah,
are an option
absolutely.
lover.
So yeah, you can
But
see what you want to do with the diagonal puts, or if you just sell some call spreads, or no, whichever way you want, or if you want to go balls deep, just sell some calls. But this is not professional risk management here. Um,
I mean,
yeah,
depending on the size you want to take, you can sell naked calls. But by the way, the trade is up. Like the outperformance 1.1% today. So it's looking good, looking good. If you want to take options, you have to look at the delta weighted beta to manage the exposure to be 1 to 1. And if you want to take shares, you just divide EWT divided by EWY, and you look at the spread that comes in, and then you multiply the shares by the spread, and you got it. By the way, it's not a financial advice again, because
yeah. This is all just chatting.
it's, yeah, we are just chatting our thoughts. Quite interesting, bro. It's quite.
Yeah,
There
and
was also another.
one thing, another aspect of this trade was, because first when I saw this, all right, TSMC could have headwinds from the FX side, I thought, all right, which also aligns this thought also aligns with Trump policies of local US chip manufacturing. You could take the trade short TSMC and long Intel because Intel they have been heavily investing into their own foundry business. Only the problem is Intel probably won't be able to take as much market share away from TSM because TSM has the lead by far compared to Intel the lead in technology in the how many nanometers, how small of chips they can produce, and therefore Intel they would only be able to take like the not like the legacy chips, like the not the highest tech chips, some market share there, but in the older chips because they simply don't have the technology yet to compete with the highest tech of TSMC. So therefore, it's better to go with Samsung, which has capabilities of also producing high-tech chips. Yeah, so I was thinking about Intel, all right. This would also align with Trump's policy in terms of, okay, we want US manufacturing. And so he would also maybe push companies to buy from Intel instead of buying from Samsung if there's a shift away from TSM. But yeah, the problem is Intel's tech. They've been lagging behind. Intel used to be this company. They are super, super advanced, super high tech leaders in their industry. And now yeah, they slagged off, and now with this new CEO, it's going to be interesting what's going to happen with what's his name, Lip Bhutan or something, the new CEO of Intel. It's going to be interesting to see if there's going to be a turnaround in this whole story. But for chips, for their foundry business, yeah, they have some catching up to do. I don't see it in this 2025. We've got to see over the next couple of years how Intel will perform. Currently, they're cheap, but they're cheap because there's not much to be excited about the company. So taking a trade
Or
here is
cheap.
kind of a speculation. If you think about if you look at the chart, you can see, all right, they've been getting sold, and now they're starting to do a little bit of consolidation. And then if you want to take a bet on some recovery in Intel, some improvement in their technology, this is all speaking about the foundry business, some improvement in the technology, then all right, you can take a bet here. But yeah, we've got to see what the future brings.
And they are cheap for a reason.
Yeah, exactly.
Like, so you explained this perfectly. Another I will touch on this FX exposure for equities. I was listening to Bloomberg today at the opening show here in Europe, and they said like, what's gonna happen? They interviewed the CEO from Germany, the company, I think it's called Continental. They asked him, the CFO, sorry, and they asked him the impact if the euro continued to strengthen. And it's actually not good. They were projecting 1.3 on the euro, like 1.2, 1.3, 1.25. I was like, this is the top. So this, I think the opportunity in the next couple of weeks, month, is not going to be in equities and FX, as you said, Torben, as you mentioned, and constructing trade around FX with equities, for example, these ETFs and these entire plays that we do, or trading the FX directly. Um, Especially if you are long dollar and short euro, the interest rates differential here is big, and you receive carry. You get paid for waiting. For example, we are short at 1.14. This is our price in the euro. 1.14 something, 1.14 something like 2 or 3, but we are short at 1.14, and our target is 1.1, 1.8, 1.08 on the euro. Another thing you just mentioned to me, if you can explain to the viewers, you said you explained a trade about B2B and B2C in equities.
Yeah, so this is then now we're going to go into the US earnings or in general into the US stocks. What we've been seeing is an outperformance from companies that do B2B business, so business to business. For example, NVIDIA, which produces chips and produces these high-tech data centers, which no consumer can afford their data centers. They cost hundreds of thousands, if not millions of dollars. So the chip segment is a B2B business where they supply like the hyperscalers with their chips. And then we have the other side, which are the B2C, business to consumer. And here we have like the Amazon, we have the Nike, we have these kind of like the retailers and so on, which are more facing towards the consumer side because we've been seeing, for example, Google, Meta, Microsoft, they all reiterated their CapEx spending, which is a sign, all right, they're confident, they have a lot of money, we're going to spend it. But it's a sign that they're confident in their, or this sign shows confidence in the B2B business. So this is a tailwind bullish for example, an Nvidia or general B2B businesses which sell to, for example, Microsoft or which sell to Google's infrastructure investments into data centers and so on. And looking at the B2C, business to consumer companies, they have been facing, yeah, we've been seeing the soft data coming in, the consumer uncertainty, the weakness in the consumer or the fear of the consumer. So this is also another idea where you can take a spread through equities, where you go long B2B stocks and you short B2C stocks, and which is a bet that, all right, the US economy is still going to be strong, but it's going to be strong on the corporate side. It's going to be strong on a investment side into infrastructure. On an, for example, on an investment side, if I remember one conference that Trump gave a couple of days ago talking about, oh, this company is investing 100 billion, they are investing 500 million, these are investing 500 billion. This is all B2B. This has nothing to do with the consumer. This is all infrastructure investment, factories, manufacturing, all that stuff, which is B2B, which will give headwinds to these companies that serve this market. But the consumer is left out of this investment. Yes, this investment can, this trickle down economy, this can trickle down towards the consumer. Maybe they get a better paycheck from building this factory and so on. But in general, the first thought, this is B2B. So therefore, you can take in also another spread trade. No? You see the macro picture, and then you interpret it into a trade where you can go long B2B, short B2C. Yeah, generally spoken, you can take this as a little inspiration. Obviously, not financial advice.
Here's the thing. I just checked McDonald's earnings and they are not that good. Problem is, which is also contradictory to this, Visa on the earnings call, they said we don't see any problems in consumer behavior. So this is why you are quite hedged in this trade. You are betting on an outperformance, which is we call it an alpha trade from B2B to B2C. And if you get another risk-off dilemma or a risk-off event or deleveraging like we had at the beginning of the year, sorry, not the beginning of the year, at the beginning of April, you're already hedged because the short on the B2C it's gonna hedge you.
And
So
it's going to
um,
be more sensitive towards a drop in sentiment or towards another negative
exactly,
episode. So you'll be
exactly.
helped out by that as well.
Another
For
thing we
example,
pointed
for
out,
example,
yeah,
we took this is a little bit of fun games playing around. We took a trade on Apple and Amazon, where we went short Apple and long Amazon actually. This is less of a B2B, B2C trade. This is more of a general situation of the two companies with Apple with their huge headwinds on tariffs and their huge cost increases trying to move their manufacturing and so on. But this trade also played out perfectly because we had a spread on the two and the Apple was more sensitive slash it reacted more negative than Amazon did. Yes, perfectly would have been, all right, Apple drops 10% and Amazon gains 10%, but due to the spread and due to the more bearishness in Apple, we still made money on it. So this is how you can play
exactly.
these kind of ideas.
Beautiful, well explained. Another thing we mentioned was the XLF loans, the banks, and should this holding. I'm looking at it. We mentioned it on the not last episode, like 4 weeks ago, 3 weeks ago, 4 weeks ago. Still looking beautiful. Earnings from banks came in resilient. Still bullish the banks, by the way. Uh, but I think it's time to hedge here. the long exposure in the banks if you are with us in the long, because looking at the VIX, we're trading right now at 23, 24. We went down from 60. Could see another push in the VIX, like to 45, 40 maybe. And using now that the vol is relatively cheaper the last month, I would like to hedge my stock portfolio. Um,
Especially
and the
probably
Japanese
is
bank.
just looking at the XLF chart, it's probably also skewed towards the call side, yeah. So you have a the for hedging, you have a benefit of the skew where it's cheaper to hedge yourself to the downside than to go no take a trade onto the upside through options.
Another life hack for the viewers. If you're a beginner and you want to try to short the markets, and you look at the market and everything is collapsing and you see the volatility is so expensive and you don't know how to short, just short banks. When you see VIX trading at 30, 40, 50, usually the implied volatility in the banks is a little bit less, and you can buy puts cheaper than buying it on the index. And in a deleveraging episode or a systemic episode, banks will go down with it, but you pay
Yeah.
less for the
But
vol
but what has to be considered is that banks
as a
profit from higher
deleveraging.
volatility. That
Yeah, I'm talking
the
about a
trading
drop like
sectors. Yeah.
yeah, no, but I'm talking about the drop like we saw in after the 2nd of April, where we saw this dump. This is what you can do, like just buy puts on XLF because the vol is cheaper. Only, again, I'm repeating, only in the leveraging episodes or risk off episodes. I think with that said, I it's gonna be an interesting week. Just don't overcommit capital now. Just wait a little bit until we get these trade like every single minute, bro. My phone like Bloomberg Walter, this and that, and another thing is like Europe, bro. Like the fuck is going on?
Oh,
Like
Germany today.
in Germany,
Uh,
it's insane. That's crazy. Like
there's
with
yeah
the
some crazy stuff going
parliament,
on.
yeah.
Germany, what we're talking about is Chancellor Merz not being approved or not in the first round of voting, not being voted in as chancellor, which is for like more regional, local elections. Yeah, sometimes it takes one round, two rounds, three rounds, but then for a chancellor election, it's already a hurdle, a bad sign that he did not pass the first round of voting of being voted into being the chancellor. So yeah, that's also going to be interesting how that develops.
Another reason to short the euro.
Yeah, another reason to which supports us because if he has problems, then it will be difficult for him to do his whole big spending package, 500 billion into investment, 500 billion there. If he already is facing problems, there's going to be difficulty for him to to get that cash into the economy, and the European economies are expecting this cash to come in, but now there could be some challenges. Yeah.
Perfect. Thank you, bro, for the informative knowledge that you gave here. That's it, folks. I hope you have a good trading week, and we will update you next week after the Fed and the BOE Bank of England. With that said, have a good week and take care.
All right, take care.